Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a leading diagonal towards the upside in a wave 1 or A, a 3-wave corrective structure to the downside in a wave B or 2, and then a continuation to the downside impulsively in a wave C or a wave 3. The most common target for your wave 2 is the 05 to the 786 Fibonacci, taken from the low to the high of wave 1, giving you a target between 56.5k and 54.7k. We just missed out on hitting the 0.5 on my chart here, as you can see. The common target for a wave B is a little bit bigger, the 382 to the 886, 57.2k to 54.1k. The 382 is an uncommon target for a wave 2, and the 886, well, preferably you do not hit the 886 for a wave 2. What is important, however, is that wave B or 2 has to be a 3-wave corrective structure and can be any corrective structure except for a triangle, which is not allowed in a wave 2. But we can have zigzag structures, ABC, sideways corrective structures, or even flat structures. However, the one that I'm currently at least keeping an eye on here is a potential zigzag in a 5-3-5-wave structure. The invalidation is very easy. That is then the high here at 59.5k with the potential of a double zigzag towards the upside. ABCW, structure in X, and another ABC to the upside in your wave Y. Preferably now we then see some strong local weakness because a wave C is an impulsive structure, so 1, 2, 3, 4, 5, which of course is quite a move to the downside. The common target for your wave C is the 1 to the 1.236 trend-based fib extension, taken from the start to the end of A to the end of wave B, giving you a target between 55.9k and 55.2k, which is in confluence with the support box here towards the downside, the blue box, 55.7k to 56.2k. The second scenario on my chart is a more bearish scenario. So here we have a finished structure in an A-B ending diagonal in a wave C, and now this move to the downside is labeled a wave 1, same corrective structure to the upside, but now it's not a wave B, it's labeled a wave 2. The retracement went to the 786 Fibonacci, taken from the start to the end of wave 1, which is a common target for a wave 2. If price does move to the upside and hits the 886 here, then the probabilities will significantly decrease for a wave 2, as the 886 is a rare target for a wave 2, common for a wave B or a wave X. Therefore, it will increase the probabilities for any move down to be corrective and to take this high sooner or later. The 886 is sitting at 59.1k. Now in this particular scenario, after wave 2, we then look for a strong continuation to the downside and new lows below the low here at 53.5k. It is, however, quite uncommon for a weekend to start a wave 3. Most commonly, the weekend is known for its sideways corrective structures and not impulsive structures like a wave 3. Another scenario that I at least want to talk about shortly, because I have seen it, is the multi 1-2, where you have a 1, 2, 1, 2, another 1, 2, and then another 1, 2, and 1, 2, 1, 2, 1, 2. And basically then the latest 1-2 has to be this diagonal towards the upside, where you have a 3-wave in 1, a 2, 3-wave in 3, a 4, and then a 3-wave in a wave 5, finishing your 5 diagonal, looking for a move to the downside and then continuation to the upside. But as you've probably seen, so many 1-2s, right? Is it possible? Absolutely, but it's not like the highest probability scenario, so to speak, when you start building 1-2, 1-2, 1-2, 1-2 after one another in a range that we have going on at the moment over here, this sideways structure. But at least it is something we have to keep in mind. Preferably then, if we are looking for a diagonal, we have 1, 2, 3, 4, 5. Wave 4 has to be a 3-wave structure and has to be a zigzag family structure in a 5-3-5-wave structure. So also here, preferably, we would then still look for a little bit more downside before then having another structure to the upside to take out the high, hit the 886 over here, and eventually look for a retracement to the downside, which is definitely interesting at least. Now, if we do want to look for bullish scenarios of this low towards the upside, right? So this being the low of a 3-wave corrective structure, and we look for strong continuation, there is actually only 3 scenarios that you have to keep an eye on. That is an impulse, a diagonal, or a multi-1-2. An impulse is a wave 1, 2, 3, 4, 5, and we don't want overlap between a wave 1 and a wave 4. That is not allowed. In this scenario, we then actually want to see a wave 1, 2, 3, 4 and 5, but 4 has overlap with your wave 1 here, and that is not what we like to see. If we then think about a diagonal, well, that is the scenario that I have just shown. And if we think about multi-1-2s, then we need a 1-2, 1-2. But if this structure here is your wave 1, it is very 3-wave-ish, right? This wave 1 here towards the upside. And at the moment, this structure here also has a bit of a 3-wave structure to it. So the multi-1-2 is not yet the greatest structure. But we do want to see weakness coming soon, because if we look at these CVD divergences, then so far we had a lot of bullish CVD divergences building in this range. It started here already with bullish CVD, played out when we took this high, right? Then we have now this bigger bullish CVD where the target is this high over here, right? And after this high was made and price moved down and created this bigger bull CVD, we also had bullish CVDs here, bullish CVDs over here, right? And now we have them locally as well. So of course it is important for a bit of weakness to start to invalidate the bullish CVDs and see some more local bearish CVD divergences. We do have a bearish CVD divergence on the chart, lower high on price, higher high on the CVD, which you will find on the 30-minute time frame or higher on the AGGR chart here. But preferably also locally, we start to see bearish CVD divergence building up to pretty much validate this bigger bearish CVD divergence. You want to have that confluence between the bigger bear CVD and also then some more local weakness. And talking about local weakness, this is actually something that I'm currently keeping an eye on. Actually, a scenario here that is quite similar compared to what we had at the low. So what I was thinking is this range here took quite a while, and I mentioned that, hey, the longer price moves sideways here, the more bullish it is, because we are going to be looking for a retracement to at least hit the 382 Fibonacci taken from the high to the low, right? The ones that were following the channel and watching the content will know the video I posted here for price to move up, or at least looking for price to move up. But locally here in that range, we had some bearish CVDs, and price here moved down with bear CVD, bear CVD, bear CVD all the time. But eventually we did break out of this range with a little bit of bullish CVDs, moving just above the support resistance area, and see some more bullish CVDs as price then grinded to the upside to the resistance that we have here. Moved down back to support and back towards the upside. Now locally here, price has been grinding sideways for a very long period of time now, which made me think of what we had here at the low, right? So the longer price is spending time sideways here, the more bearish it becomes. In other words, the higher the probabilities to look for a bit of a retracement to the downside, which can be quite similar to what we see over here. However, in this case, it is the other way around, because this time what we see on the chart is bullish CVD divergences here instead of the bearish CVD divergences. And if price is going to continue to range here, will we eventually see a bit of bearish CVD divergences come in to increase the probabilities to move below this support resistance area, like we did here with the push to the upside, bullish CVDs, we moved above, ranged shortly inside the SR area, but then more bullish CVDs started forming, increasing the probabilities to move to the other side. We could get something similar here if we see some proof of weakness, so some bearish CVDs, price moving below the support resistance area, and also here we have moved towards the upside but actually never hit the 0.382 Fibonacci, just like with this move to the downside. If you take a 382 from the low to this high, or this high, or this, or this, or this high, you will see that none of these retracements actually went down to the 0.382. And in Elliott waves, when we look for a zigzag ABC or a WXY or a 1, 2, 3, you actually expect the 382 to be hit as a minimum Fibonacci target. It is very rare for structures to not at least hit the 382 Fib, right? Unless you really have multiple 1-2s going on, which is very bullish, but not really the highest probability. So it is food for thought. Now, if we then go to the probabilities on this time frame here, currently the probabilities here very locally are a bit higher for price to move towards the downside. Looking for a retracement down, observing the impulsivity because it is weekend after all, and most commonly in the weekend we have ranging structures. Preferably though, before looking for price to really move down, I would like to see some additional weakness, meaning I like to see some bearish CVDs locally, because so far we have bullish CVDs on pretty much all of the time frames, and also here locally we still have bullish CVDs as well. So it would be nice to invalidate these and see some more local bearish CVDs building as well, and price moving below this support resistance area into the 382. But from an Elliott wave perspective, it does make sense to look for a bit of a retracement to the downside, especially the longer we range here, the higher the probabilities become, right? Now, on a 1 hour time frame, when we really zoom out and look at this range in total, currently the higher probability scenario would be the scenario where we are looking for price to take out this high at least one more time. And that is also because of the bigger bullish CVD divergences that we have going on over here. Generally, I don't really like to go against such bullish CVD divergences locally. That doesn't really matter. But saying, hey, the bearish scenario has the highest probability, bigger 1, 2, and then a wave 3 to the downside. Well, for that to really increase in probabilities, I really need to see some local weakness from an Elliott wave point of view and an impulsive 3 to the downside. And at the moment, we have bullish CVDs pretty much all across the board except locally, but even the small little bull CVD here is not yet invalidated, right? So that's something to keep in mind as well. And even if price would move down in a zigzag, you still have bullish CVD potential here. So currently the probabilities when zooming out remain higher to look for price to sooner or later take out that high, unless we really start to see some strong local weakness and consistent bearish CVD divergences coming in. But locally at the moment, the probabilities would be higher now for a bit of a move to the downside from an Elliott wave point of view, either directly losing the support resistance area, preferably with bearish CVDs, or of course in the arguably more bullish scenario where we look for a impulsive structure diagonal to the upside and then move back down after taking this high. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.